Hi everyone, welcome back to the channel. This video is a part of the monthly portfolio update series made for the individuals invested with me on Etoro. During August, the portfolio was down 6.8%, and for the year, we're down 14.58%. We are invested in Kweb, Alibaba, Warner Brothers Discovery, Tencent, VF Corp, Occidental, and Carlytics. I'm going to start off by discussing a position that we sold off last month, Paramount Global. On 27th August, it was announced that Edgar Bronfman dropped his bid for Paramount Global, clearing the path for Skydance to take over the company. Initially, I had invested in Paramount Global because I considered it to be an attractive takeover target. And it was a takeover target. But unfortunately, it was a deal that only favors one class of shareholders, the Class A shareholders. This deal could have played out very differently because at one point in May, Apollo Global had offered $26 billion for Paramount, which would have been a decent premium for our shares. There are quite a few lessons that I've learned during the course of this painful ordeal. But the most important would be to be aware about the history of the controlling shareholder. Previously, I had not anticipated how likely is it for a controlling shareholder to do what is only in their own best interest and not in the best interest of the company. The Redstone family does not have a great reputation for treating shareholders well, and the current controlling shareholder has continued this legacy. Even as I look at Paramount Global in its current state, yes, the company does have assets that can be optimized and monetized better. But the new management are starting off by absolutely stealing any potential upside through vicious planned dilution at multiple levels. Even if they're able to turn this company around, the Skydance and the Ellison Group will be the only primary beneficiaries with other shareholders as an afterthought. The prospects for Paramount Class B shareholders seem bleak, and that's why I sold out of the position. Let's go back to the portfolio, as I'd like to highlight some steps by another company that is extremely shareholder friendly. On September 10th, we got news that Alibaba was added to the Stock Connect. This was after the company upgraded a primary status on the Hong Kong exchange in August. Brendan Ahern from Crane Shares stated that mainland investors bought over $1 billion worth of Alibaba stock on its southbound Stock Connect debut. This is in addition to the ongoing buyback program that the company is aggressively pursuing. After 3 long years of being invested in Alibaba, I think that we're finally at a bullish signal for the company from a technical and a fundamental perspective. We were buying Alibaba stock right at the bottom of its all-time lows, at peak pessimism. We have bought as low as $62.74, and our current average price is $76.8. It's just under a 20% position for us in the portfolio. Let's go back to the portfolio to discuss our last company for this update, a new position that I've added recently, Occidental Petroleum. Occidental popped up on a lot of investors' radar in 2019 when Buffett supported the company's bid for Anadarko with $10 billion. Shortly after, the stock price dropped due to the decrease in demand for oil during the pandemic, but demand very quickly bounced back, as did the stock. Initially, it seemed like Buffett just saw OXY Anadarko deal as a favorable financing opportunity for Berkshire. And then from Feb 28, 2022 till March, he started aggressively purchasing shares within the span of 2 weeks. He was able to acquire 14% of the outstanding shares. The aggressive buying continued, and in August 2022, Berkshire Hathaway received approvals to buy up to 50% of the outstanding Occidental stock. A few months passed by, and I was watching a presentation by Vicky Hollop, the CEO of Occidental, and she mentioned that the future of Occidental was that it was going to be a carbon management company. So I dug deeper into the various segments of Oxy. The company has 4 major segments: oil and gas, OxyChem, Oxy Midstream, Oxy Low Carbon Ventures. In August 2023, the company had acquired Canadian startup Carbon Engineering focused on direct air capture. Occidental had been working with Carbon Engineering on direct air capture deployment since 2019. In their disclosure, it is stated that acquiring Carbon Engineering aligns with Occidental's integrated net zero strategy and provides Occidental, through its 1.5 subsidiary, the opportunity to rapidly advance DAC technology breakthroughs and accelerate deployment of DAC as a large-scale, cost-effective global carbon removal solution. What they did not mention in this disclosure or anywhere is that back in 2022, the Inflation Reduction Act increased a substantial increase in the carbon capture subsidy. Direct air capture plants would now be able to claim $180 for every ton of CO2 up to 12 years, up from $50 before the act. Occidental, post the acquisition of Carbon Engineering, would be at the forefront of this new growth industry for carbon credits, and this industry will be developed through incentives subsidized by the US government. This would enable Occidental to have a strong base in their existing legacy oil and gas business while growing from related diversification in a growth vector that directly complements its existing businesses. Occidental has extended partnerships with various entities, and one of the most notable entities is ADNOC, or the Abu Dhabi National Oil Company, to advance their efforts in direct air capture. The most notable project is Stratos. Stratos by Occidental Petroleum represents a pioneering venture in direct air capture. Located in Texas, Stratos is designed to capture up to 500,000 metric tons of CO2 annually with plans to scale up. BlackRock is a co-investor with Occidental on the project, contributing $550 million to fund the cost. As of July 2024, the company announced an agreement with Microsoft to sell 500,000 metric tons of carbon dioxide removal credits over 6 years, representing the largest single purchase of CDR credits enabled by direct air capture, DAC, to date. The CDR credits will be facilitated directly by the Stratos project in Texas. Now, putting all of this together, since 2019, the company has acquired Anadarko in 2019, Carbon Engineering in 2023, and Crown Dock in 2024. As mentioned in their Q2 2024 earnings presentation, the current focus is debt reduction, which would be in a combination of asset divestitures and from cash flow. Beyond that, they've guided towards return of capital to shareholders through a combination of buybacks and the ongoing dividend, which could continue to increase after the debt paydown and the redemption of preferred equity. In the short term, the stock price could fluctuate with a fluctuation in the price of oil, but the management has set up a strong base of assets in the legacy oil and gas business, which would serve as a base to fund the growth of the carbon management business that Occidental is trying to transform into. With regards to our portfolio, it is approximately a 6.5% position, but I would be open to scaling it up to a 10% position if there's further weakness in the stock price. If we don't get an opportunity to add to our position, I am still comfortable with the current allocation. I hope that this brief overview has given you a better insight as to how I'm viewing some of the positions in our portfolio. Please let me know if you have questions about any individual positions in the comments, or if there's anything that you'd like me to cover in future updates. If you'd like to connect with me directly, I've included links to my Twitter and Instagram in the description, so you can reach out there. Thanks for watching this update. Take care.